Good afternoon. Voice clear? Voice clear? Today. What? Liquidation. Okay. Liquidation of companies. Okay. My voice is clear to all of you? Okay. So let us start the topic today, liquidation of companies. Liquidation of companies. Now start writing properly. when any company went into liquidation, when any company went into liquidation or winding up, when any company went into liquidation or winding up, then management of company prepares a statement and submit it to liquidator. Submit it to liquidator. Such statement is called statement of affairs. And right in the second part, this is first, this is second. Liquidator of company prepares a statement and submit it to management. Such statement is called liquidators. Write this first. Liquidators final account or official liquidator final account. Write this. Now listen this, students. Whenever any company is in financial trouble, when the financial position of any company is not good, in that situation, generally, any company has three options. Whenever financial position of any company is not good, then in such situation, any company has three options. Option number one is internal reconstruction, which we discussed earlier. Option two is amalgamation, absorption. And the third is liquidation of a company, winding up of a company. If the financial position of any company is not good, company will try to improve its financial position by doing internal reconstruction. If internal reconstruction is not done, then it is better to sell the company to another company or to any other business. It is better to sell the company. If it is not possible to internally reconstruct the company and it is not possible to sell the company to another company and the financial position is not good, then the last option remains is liquidation or winding up the company, that is to close the company. Liquidation or winding up. Liquidation or winding up means company is not closed. Liquidation doesn't mean company is closed. Liquidation means company is starting uh, company is starting its procedure to close down. Yes, student, try to understand this. There is difference between dissolution of company and liquidation. Liquidation is a process. Liquidation is a process and dissolution is the result. Okay, so whenever any company goes into liquidation, liquidation is also called winding up. When any company goes into liquidation or winding up, it is the commencement, it is the start of the process towards dissolution. Okay, so whenever liquidation starts, when liquidation ends, it means that all assets are sold, all liabilities are paid off, and in that case, we can say that company is dissolved. There is a difference between liquidation and dissolution of company. Liquidation is a process and dissolution is the result. And student, you are aware about this, that whenever any company enters into liquidation or winding up, a person is appointed to dispose all the assets and settle all the liabilities. Such person is called liquidator. And liquidator can any person among creditors or members can be appointed as a liquidator in case of voluntary liquidation. But if the liquidation is by compulsory liquidation, then official liquidator becomes the liquidator. Okay, students. So again, once again I am repeating all these things. Please try to understand this. Liquidation is a process and dissolution is the result. Whenever company went into liquidation, then a person is appointed to dispose the assets and settle the liabilities. Such person is called liquidator. Liquidation are generally there are two types of liquidation: winding up. One is voluntary winding up, another is compulsory winding up. In case of voluntary winding up, it may be creditors voluntary winding up or members voluntary winding up. Any member or creditors can become the liquidator of the company. But in case of compulsory winding up, in that case, court orders the winding up, then official liquidator automatically becomes a liquidator of any company. Okay, so and student, remember this: not only company is liquidated only if the financial position is not good. Even if even if the financial position is good, there may be any other reasons. There may be any other reasons mentioned in the company law, Companies Act, in the situations in which company can be liquidated. Okay, now listen this, the page number 1. When liquidation starts, management of company prepares a statement and hand over that statement to the liquidator. When liquidation starts, management of company prepares one statement and hand over that statement to the liquidator. Such statement is called statement of affairs. What is statement of affairs? I will tell you. First, learn the name, statement of affairs. And in the case of liquidation, one statement is prepared by a liquidator and it is submitted to the management. And such statement is called liquidator's final account, or official liquidator final account. Now, what are these two statements? We will discuss it. Now, write down statement of affairs. Statement of affairs prepared by company and submitted to liquidator. Submitted to liquidator. Now, what is statement of affairs? What is statement of affairs? Students, in a very simple language, statement of affairs is, it is estimated receipt and payment. Estimated receipt and payment. Management of the company prepares a statement called statement of affairs, which is the estimated receipt and payment, and it is submitted to the liquidator of the company. Estimated receipt and payment means estimated receipt and payment. Now, statement of affairs, we can call it SOA. SOA consists of list A, list B, list C, list D, list E, list F, list G. SOA statement of affairs consists of 7 lists, list A, B, C, D, E, F, G. List A is assets not specifically placed. List B is assets specifically placed. List C is preferential creditors. List D is debenture holders secured by floating charge. List E is unsecured creditors. List F, preference shareholders. List G, equity shareholders. Statement of affairs is a statement prepared by a company and submitted to the liquidator. This statement of affairs is nothing else but it is estimated receipt and payment account. And in this statement, there are 7 lists: list A, B, C, D, E, F, G. List A and B regarding assets, related to assets, and list C to list G, it is related to liability. When assets will be sold, what will be when asset will be sold, what will be the estimated amount of receipt? It is shown in list A and list B. And when liabilities are paid off, then what will be the estimated amount of payments? It will be shown in list C to list G. List C to list G. Now consider an example. Consider an example. Balance sheet of X Limited as on 31st March 19. date of starting of winding up. X Limited is a company which went into liquidation, which went into winding up on 31st March 2019. I am preparing the balance sheet in a traditional format. Equity share capital rupees 10. Preference share capital is 100. 9% debentures rupees 100. Outstanding interest on debenture other liabilities. Say equity capital 10 lakh, preference share 8 lakhs, debenture 10 lakh, plus 90,000, other liability 5 lakh 10,000. 34 lakh. This is the balance sheet of a company X Limited in winding up. The date of commencement of winding up is 31st March 2019. Now, land and building, plant and machinery, plant and machinery, furniture, stock, debtors, cash, and P&L. 34 lakh is the total. Seven lakh, 6 lakh, 4 lakh, and P&L is 9 lakh. Writing the example or not? All of you writing the example? Okay. Balance sheet of a company is given X Limited in winding up. Date of commencement of winding up is 31st March 2019. Now, other liabilities includes rupees 50,000 preferential creditors. Other liability includes rupees 50,000 preferential creditors and rupees 50,000 preferential creditors and rupees other liabilities includes rupees 50,000 preferential creditors and rupees 3 lakh bank loan. Bank loan is secured against stock. Bank loan is secured against stock. Estimated realizable values are land and building, rupees 4 lakh, plant and machinery, rupees 2,50,000, furniture, rupees 3 lakh, stock, rupees 1,80,000. Debtors 170. Write this. You have written this. Okay. Prepare a statement of affairs. Prepare a statement of affairs. X Limited. Statement of affairs as on 31st March 19. Commencement of winding up. Statement of affairs. Amount in rupees. ERV, estimated realizable value. Statement of affairs is nothing else, student. Please try to remember this. This is receipt and payment account, but on an estimated basis. Company's management will prepare this statement and submit it to liquidator. And this statement shows what is the expected amount of receipt and what are the expected payment that company has to be done. So, particulars. So, in statement of affairs, first list is list A. Assets. Assets not specifically placed. In this list, all the assets are written which are not specifically placed anywhere. In this problem, student, please read the question carefully. Only stock is the asset which is specifically placed against bank loan. Bank loan is secured against stock. Stock is not the asset of list A because under list A, all the assets which are not specifically placed anywhere will come. So stock is not come in list A. Stock is not the list A asset. All assets other than stock will come under list A. Say land and building, plant and machinery, furniture and fixture, land, building, plant, machinery, furniture, fixture, debtors and cash. Debtors, cash. What are the estimated realizable value? In this statement, book values are not written. In this statement, estimated realizable values are written. The values which are realizable from the expected sales. When company went into liquidation, it is the responsibility and duty of liquidator to sell the assets. And what are the expected selling values are called estimated realizable values. That is 4 lakh, 250, 3 lakh. 4 lakh, 2,50,000, 3 lakh, 1,70,000 debtors. What is the value of cash? What is the value of cash? 1 lakh. This is A. What is the total? What is the total of list A? It is 12 lakh 20,000. 12 lakh 20,000. Assets not specifically placed. Now, list B. Asset specifically placed. In this list B, a small table is prepared inside this table, this statement, and this table consists of 1, 2, 3, 4, and 5 columns. One is name of asset. List B is stock. Stock is the asset which is specifically placed against bank loan. Stock is the asset which is specifically placed against bank loan. Its estimated realizable value, ERV. Estimated realizable value. What is the estimated realizable value of stock? What is the estimated? 1,80,000. Value of liability, amount of bank loan. What is the amount of bank loan which is secured against stock? Bank loan is 3 lakh. No, 50,000 are preferential creditors. Bank loan 3 lakh. So liabilities of rupees 3 lakh and asset realized only 180. This situation will result in surplus or deficiency. Deficiency. And deficiency is ranking as unsecured. Deficiency is ranking as unsecured, and if there will be surplus, carried to last column. So deficiency is 1,20,000. Deficiency is 1,20,000, surplus is nil. 1,80,000 is the value of estimated realizable value of stock. 3 lakh is the value of liability against it. So this situation is a deficiency. Only 1,80,000 bank loan is secured. 120 is deficiency. Now it is treated as unsecured and it is shown in the list E. List A is asset not specifically placed. List B is asset specifically placed. List A and B are related to assets. List A and B are related to asset and the remaining list C, D, E, F, G are related to liabilities payment. Okay. Now, continue this statement. Continue this statement. Now this total of B is nil. Now estimated total assets. Estimated total assets available for preferential creditors, debenture holders, and unsecured creditors. It is A plus B, 12,20,000. 12,20,000. Asset under list A are 12,20,000. Asset under list B has amount of nil because realizable value is less than the amount of liability. So there was a deficiency. There is no surplus. If there is surplus, then we will write the surplus here. If under list B surplus arises, then its value is then that surplus is written on the amount column, written in the amount column. Now, after list A and list B, summary of gross assets is prepared. After list A and list B, list C, D, E, F not starts. After list A and list B, liability side not start. This statement of affairs consists of two parts. In this statement of affairs, there are 7 lists, list A to list G. List A and B are related to asset and the remaining lists are related to liabilities. But before starting liabilities, in this statement, gross asset summary is prepared because this 12,20,000 is not gross asset. This is not gross asset because list B asset is net off. Amount of list B asset is set off. Summary of gross asset. Asset under list B and asset under list A. So, asset under list B has a value of 1,80,000. 1,80,000 and list A is 12,20,000. So total amount received, receivable estimated receipt is 14 lakh. Gross amount of receipt is 14 lakh because rupees 1,80,000 is receivable from stock also. In the right column of statement of affairs, amount shown is 12,20,000. It is not gross asset, it is only net assets, because one of the asset was realized in the list B. So if anybody asks regarding this, what is the value of gross asset? Yes, if plant and machinery and land and building is mortgaged, Kumar Amit is asking me a question that if plant and machinery and land and building is mortgaged, then also the same treatment is stock. Definitely, any of the asset is specifically placed will come in the list B. Any asset, if it is mortgaged or placed, it will come under list B, because list B is asset specifically placed and list A is asset not specifically placed. In my question, only there is one asset, stock, which is in the list B. Okay. Now next. Now liability side starts. Now this is the liability part of statement of affairs. Now this is liabilities. This is amount in rupees. And in the liability part, in the left side, gross liabilities are written. Gross assets are shown after list A and list B. Gross liabilities are written in the left side of the statement. Now, first of all, secured liabilities to the extent, not list C, set off with list B. In the liability part of statement, of affairs, first of all, that liability is written which is set off with list B. Let me know what is the amount set off. Bank loan is set off. What is the amount? No, not 3 lakh. To the extent set off. Only 180. 180 set off. One lakh 80,000. And right side dash, because payment we have already shown. Right side is for receipt and payment. Right side is for estimated receipt and payment. So in the list B, we have already shown the payment. Now, preferential creditors as per list C What is the amount of preferential creditors? After this question, I will explain what are preferential creditors. But in this question, directly preferential creditors are given. Under the Companies Act, there are certain creditors. Under Companies Act, there are certain creditors which are to be paid first. Those creditors are called preferential creditors. So in the left side, we will write the amount of liability paid, and the right side payment will be shown. Now, after paying preferential creditors, estimated amount available for debenture holders and unsecured creditors. What is the amount? 1220. 1220 minus 50,000. 1220 is the total receipt. Minus 50,000 is how much amount? 1220 minus 50. 11,70,000. Now list D. Debenture holders. List D. What is the amount of debenture holders including interest? 10,90,000. $10,90,000. Estimated amount available for unsecured creditors. Estimated amount available as regards debenture holders. After paying debenture holders, what is the amount? 80,000 only. Now list E. Unsecured creditors. Can anybody tell me the amount of unsecured creditors? Amount of unsecured creditors? No. Total creditors liability is 5,10,000. Total creditors 5,10,000. Out of 5,10,000, 50,000 is preferential creditors. Listen this carefully. Total creditors are 5,10,000. Preferential creditors 50,000. Bank loan 3 lakh. Others 350, 160. Yes. This is shown under list C. These are unsecured. List E. These are unsecured. And out of this 3 lakh, how much is set off? Out of this 3 lakh, how much is set off? Under list B. 180. So 180 is secured. So 120 is 120 is unsecured. So list E में total amount, what will be in the list E? What is the total amount in list E? Yes, 280. Out of total liability of 5,10,000, 50,000 is preferential creditors, which is shown in the list C. 3 lakh is bank loan and 160 is others. Out of 3 lakh bank loan, 180 is secured, so 120 is unsecured. So 120 is unsecured bank loan and 160 is other unsecured. So total is 280. So on liability side it is 2,80,000 and it is 2,80,000. So amount available is only 80. Now this is surplus or deficiency? Surplus or deficiency? Estimated deficiency as regards creditors 2 lakh, and after this listing make the total of gross liability. What is the total of gross liability? 16 lakh. After listing gross liability are totaled, and this estimated deficiency is always difference between gross assets and gross liabilities. This is after list E, whatever may be the result, may be deficiency or may be surplus, it is always difference between gross assets and gross liabilities. Listen there, what are the gross assets? What is the amount of gross asset after list B? Amount of gross asset after list B is 14 lakh. So what is the amount, estimated amount receivable? What is the estimated gross amount receivable from sale of all assets? It is 14 lakh total from list A and list B. From list A and list B is 14 lakh. And what is the liability? What are the gross liabilities? What are the gross liabilities? 16 lakh. So 2 lakh is the deficiency. This is not actual deficiency. This is not actual receipt and payment. Since this receipt and payment is based on estimations, this is estimated deficiency, which the management of company is giving, informing to the liquidator that as per management of company, This statement is prepared by the management of company, and this statement is submitted by management to the liquidator. So this statement is to inform the liquidator that if you will go and realize the assets and pay off the liabilities, this would be the estimated situation. This statement will help liquidator to estimate and analyze the situation. Now, continue the statement. Now after list E, there are no gross liabilities. Gross liabilities are totaled. Now preference share capital. List F. What is the amount of preference capital in balance sheet? What is the amount of preference capital in balance sheet? 8 lakhs. And what is the amount of equity share capital? List G. It is 10 lakh. So finally, estimated deficiency as regards members, it is 2 lakh already deficiency after list C. Company is not able to pay its creditors. 2 lakh is the deficiency. 8 lakh capital is deficiency. 10 lakh is deficiency. Total final deficiency is 20 lakhs. Total deficiency is 20 lakhs. And student, write a note after this statement, and you should remember this. This statement is subject to uncalled capital to be called up. In my question, in the given question, the capital was fully paid. It is also, there may be also the situation that there may be partly paid capital. So even if the partly paid capital, if calls is made and there are calls in arrears, then calls in arrears are shown under list A, because calls in arrears are assets. But if the company has not yet called the capital amount, suppose rupees 10 share, only rupees 8 is called up, 2 is not yet called up, then whenever the 2 rupees is called, it will be a receipt for the company. But that receipt is not shown in the statement of affairs. This statement is subject to uncalled capital to be called up. And liquidation expenses. If in the question there is partly paid up capital which is not yet called up, if in the question there is partly paid up capital which is not yet called up, then definitely whenever the company will call the amount, there it will be a receipt for the company, but that receipt is not shown in this statement. Okay, it will be shown in actual receipt and payment. Actual receipt and payment is prepared by liquidator later on. And definitely, student, you should know this. Liquidation is a legal process, so there may be some liquidation expenses also, but which results in payment. But that liquidation expense, that payment is not also not shown in this statement. This statement is subject to this receipt and payment. This statement of affairs is subject to this receipt and payment. Okay. So finally, remember this statement of affairs results in, what is the final result of statement of affairs? It is estimated either surplus or estimated deficiency. Estimated surplus or estimated deficiency. Final result of statement of affairs is either estimated surplus or estimated deficiency. Note this. Fine. Okay. So finally, statement of affairs. Statement of affairs is a statement of, it is nothing else, statement of receipt, payment. But receipt payment on estimated basis. Statement of affairs is a statement of receipt and payment on estimated basis. Prepared by company. Prepared by company. Submitted to liquidator. Submitted to liquidator. consist of list A, list B, list C, list D, list E, okay, list F, list G. And final result is estimated deficiency or surplus. Is this clear? Okay. Next. Next. Now, assets are actually sold by liquidator. Liabilities are actually paid by liquidator. Assets are actually sold by liquidator. Liabilities are actually paid by liquidator. So, liquidator will prepare receipt and payment. Yes, liquidator will also prepare receipt and payment, but on actual basis. Now the receipt and payment is prepared by liquidator. Earlier, companies prepared receipt and payment at the time of liquidation of company, at the beginning of the liquidation, at the starting of the liquidation. At the starting of the liquidation, at the commencement of the liquidation, company prepares the receipt and payment on estimated basis and give it to the liquidator. Now, liquidator has sold the asset, disposed of the settled the liabilities, and now liquidator will prepare receipt and payment, but on actual basis. It is an actual receipt payment. And this actual receipt and payment is called liquidator final account. And this actual receipt and payment is called liquidator final account. Okay. So the earlier when company went into liquidation, first receipt and payment is prepared by company, then it is submitted to the liquidator. That receipt and payment is on estimated basis, and the final result of that receipt and payment is estimated surplus or estimated deficiency. It consists of 7 lists. List A to list G. List A and B are related to assets. List C to G is related to liabilities, including capital. Okay. Now next example. Example. From the following, prepare liquidator final account. Liquidator final account. From the following, prepare liquidator final account. Cash rupees 50,000. Bank balance rupees 1 lakh. Assets realized as follows. Stock 3 lakh. Debtors 1 lakh. Building 1,80,000. Furniture 75,000. Machinery 1,25,000. Now cost of execution realization rupees 2,000. Trading profits in cash. Trading loss write an example. Cost of execution 2,000. Liquidators remuneration rupees 25,000. Liquidation expenses rupees 10,000. Legal charges rupees 5,000. Preferential creditors rupees 65,000. Next, 5% debentures. %5 debentures. $80,000. Unsecured creditors. Unsecured creditors. Rupees 15,000. Secured creditors against building. Secured creditors against building. 1,50,000. Preference share capital. Rupees 70,000. Equity share capital. Rupees 6 lakh. Now, liquidator final statement of account or final account. Student, you should remember this. Liquidator final statement of account is also prepared like statement of affairs in a proper format. Format is fixed. First of all, receipt side, two assets realized. Now, first of all, cash, then bank balance. What is the amount of cash? What is the amount of cash? And what is the amount of bank balance? What is the amount of bank balance? One lakh. So 50,000 is cash. 1 lakh is bank balance already realized. Now what are the other assets? Other assets are except building. Building is actually, building is secured creditors. Building is secured, mortgaged. So other than building, tell me stock, debtors, furniture, machinery. Stock, debtors, furniture, machinery. So stock, debtors, furniture, machinery. So what is the value of stock? Stock. Machinery is 125. Furniture is stock 3 lakh. Debtors, debtors and debtors 1 lakh. Debtors 1 lakh. Furniture 75,000. So asset realized, cash and bank already realized, stock, debtors, furniture, machinery. Why building is not written? Because we will write 2 surplus from security. Actually, building is given as security against other liabilities, secured creditors. So what is the value of secured creditors? What is the value of secured creditors? Secured creditors 150. And what is the amount realized from building? So 30,000 is surplus. In case of secured liabilities, we will show the net amount only. In case of secured liabilities, we will show the net amount only. 180 is realized from building and 150 is the liability secured. So the net amount of surplus is receipt is 30,000. If suppose amount is short, suppose liability is 150 and building is realized only 140, then surplus from security is nil and balance 10,000 deficit is shown on the payment side with unsecured creditors. If bank other secured liability suppose 150 and building realized only 140, then surplus from security is nil, 10,000 shortage. So that 10,000 secured creditor will be treated as unsecured creditors. Now student, remember this payment side is fixed. Always, first of all, you will write legal charges. Second, you would write liquidator's remuneration. This is fixed. Third, liquidation expense. Fourth, on the fourth number, we will write debenture holders. But remember this, before debenture holders, always payment is made to preferential creditors. Debenture holders, in this problem, if payment is short, you remember this, name of debenture holders is written first. This is the format, we can't change this. Name of the debenture holders is written first, but payment is always made to preferential creditors first. Preferential creditors. Then unsecured creditors. Then preference shareholder. And then lastly, equity shareholder. This is not estimated receipt and payment. This is actual receipt and payment. Now let me know what is legal charges. What is the amount of legal charges? $5,000. if there is any payment called cost of execution, if there is any payment cost of execution, yes. What do you mean by cost of execution? Cost of realization. It is cost of execution means to when cost of execution 2000. Yes. What is cost of execution? It's a cost, it's an expense, and it is necessary to realize the assets. But in this format, there is no place for cost of execution in payment side. Student, remember this. Cost of execution is shown in receipt side negative. Cost of execution is shown as a negative payment, negative amount in receipt side. This is a format. Now, what is liquidator's remuneration? Liquidator's remuneration, yes, 25,000. Liquidation expenses, 10,000. Now, amount from contributories, amount from shareholders, nil, because in this question, all the question, nothing is mentioned, so all the shares are fully paid up. All the shares are fully paid up, so nothing is receivable from shareholders. Now, what is the amount of preferential creditors? Name of debenture holders is written first, but you should remember this. First of all, we will always pay before debenture holders, preferential creditors are to be paid. Yes, 65,000. Now debenture holders. Now debenture holders. Yes. Next, unsecured. Unsecured creditors, 1,50,000. Now check the payment amount. Total of receipt side is total of receipt side. Yes, unsecured is 15,000. Yes, yes. Payment receipt side total. I think 778. I think 778. Yes. Now, what is the amount of preference capital? What is the amount of preference capital? 70,000. And final balance is given to whatever may be the balance, maybe less or more. Final balance is given to equity shareholder. Not 6 lakh. 778 minus all payments. 778 minus all payment. 6 lakh is the equity capital. At the time of liquidation, whatever remains, whether less or more, it is for equity shareholder. It may be less than 6 lakh, it may be 6 lakh, it may be more than 6 lakh. Yes, it is 5 lakh 8,000. This is the actual receipt and payment. Yes, yes. Equity amount is always balancing figure. Is this clear? Okay. Now write an important point. Preference dividend preference dividend is always payable till the just a minute. Preference dividend preference dividend is always payable till the starting of winding up. The date on which is winding up is started, winding up is commenced. Preference dividend is payable only till the date of winding up. Whether company is solvent or insolvent. It doesn't matter whether company is solvent or insolvent. Whether company is solvent or insolvent, if there is any preference dividend payable, it should be payable till the date of commencement of winding up. Once the winding up started, because winding up may be continue for 1 year, 6 months, 2 years, 5 years. Yes, winding up is a process and dissolution is the result. So till the date of winding up. Now, but there is a different concept for debenture interest. Debenture interest debenture interest is payable till the date of starting of winding up till the date of final payment if company is insolvent. If company is insolvent and goes into winding up, if company is insolvent and goes into winding up, then debenture holders are payable, interest is payable to debenture holders only till the date of when the winding up begins. After that, even if winding up takes 1 year, 6 months, 3 years period, interest is payable till the date of starting of winding up only. But if the company is solvent, if the company is solvent, then debenture holders are entitled to interest till the date when they get final payment. Suppose winding up starts on 31st March 2019 and final payment is made on 30th June 2019. Suppose winding up starts on 31st March 19 and final payment to debenture holders is made on 30th June 19. So debenture holders are eligible for interest up to 30th June 19. If the company is solvent, but if company is insolvent, then they are eligible for interest only till the starting of winding up. Is this clear? You should remember this. This is the order which you should be followed, which should be followed. You can't change this order in the examination because this is a strict format. Date of final payment means suppose remember this, winding up is a process. Yes, if winding up starts on 31st March 2019, then it is possible that winding up continues for 2 years. It will take 2 years to completely wound up the company. So whenever the debenture holder will get the final payment, suppose winding up starts on 31st March 2019, winding up ends on 31st March 2020, and debenture holders are getting payment on 31st March 2020. Then interest is payable up to that date on which they receive their final payment. This is legal charges. This is liquidators remuneration, liquidation expenses, debentures, preferential creditors, then unsecured creditors, then preference shareholder, then equity shareholder. Each format should be learned properly. Yes, definitely. You can learn this like this: low, 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 D for desi, P for peda, under, pista, ilaichi. The code word, the acronym is for this: low, desi, peda, under, pista, ilaichi. Low is L. Legal charges, liquidators remuneration, liquidation expenses. D for desi is for debenture, peda is for preferential creditors. Under is unsecured creditors, Pista is preference shareholders, and Elaichi is equity shareholder. But this format should be strictly followed. And it should be noted that debenture holders are written in prior are written first, but in actual payment is first made to preferential creditors Okay, you should remember this. If there is any shortage of payment, then first you have to pay legal charges, then liquidator's remuneration, then liquidation expenses. Then, not debenture holders. Debenture holders is written first. But you should remember this. If there is shortage of payment, you should give priority to preferential creditors. Is this clear? So we'll take a break. Yes, it's the time to disco. Hello, hello, hello. Hello. Hello, hello. मैंने मिनिमाइज किया ना तो वो चले कैसे हेलो 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 वॉइस क्लियर ओके now the next topic is B-list contributories. Now example is winding up of X Limited. Write this example. Commence on winding up of X Limited commenced on 1st April 2018. Following are the details. Name of shareholder, name of shareholders, number of shares, date of ceasing to be member, unpaid creditors. X, A, B, C, D. 1500 shares, 1000 shares, 500 shares, 300 shares, 200 shares. Prepare statement of B list contributories. लिख लिया ये? You wrote this? Okay. Write it. Prepare B statement of B list contributories and write also no funds are available with liquidator and present members are not able to contribute. No funds are available with the credit liquidators and present members are not able to contribute. Okay. As per the provisions of Companies Act, please listen this. If at the time of liquidation, all receipts are, you know this, please listen carefully. At the time of liquidation, a person is appointed to sell the assets and settle the liabilities, and that person is called liquidator. And in actual, liquidator will dispose of all the assets and pay settle all the liabilities. Now suppose at the time of liquidation, liquidator has disposed of the assets and he's paying the liability. But now creditors are unpaid. Some creditors are unpaid, still unpaid, and there are no funds available with the liquidator. In the previous question, we have funds available with the liquidator, and therefore final payment is made to the equity shareholder, even if there is short payment, but some payment is, but all the liabilities are paid off. But in this situation, suppose the situation is like this, liquidator has no funds available with him. Whatever funds he has collected from sale of assets, he has already paid to the legal fees, liquidator, his remuneration, liquidation expenses, preferential creditors, debenture holders. Some creditors are still unpaid and no funds available with the liquidator. So definitely, if there are partly paid up shares, company will make a call on those shares. And in this situation, suppose rupees 10 shares, 6 paid up, company can ask for rupees 4 per share, which is not yet called or paid. So in this situation, 4 rupees should be given by per share should be given by the shareholder. And those who are existing shareholder, the shareholders at the time of liquidation are called existing shareholders of the company. Okay, they are not, if they are not able to pay, they are not able to pay. Present members are called A list contributories. Contributory means a person who will contribute at the time of liquidation. Contributories are person who will contribute at the time of liquidation. So present members, present shareholders of company are called A list contributory. So if there is no funds available with the liquidator and present members are not able to pay the amount, then as per the law, and the creditors are still unpaid, then as per the law, company can call its past shareholders to pay the amount. Now, how much past shareholders? The shareholders who's the shareholders, the shareholder who transfer his shares, partly paid up shares, the shareholder who transfer his partly paid up shares just before 12 months of the commencement of winding up, just before the 12 month of commencement of winding up. Okay, only those shareholders who have transferred their shares, within 12 months of commencement of winding up are called B list contributory. The shareholder, if any shareholder transfer his share beyond the 12 months before the winding up, then cannot be called upon. And definitely those who will called upon can be called upon only for the unpaid amount, which is still unpaid, partly paid up amount. Okay, transfer to anybody. Suppose there are five, in this problem, information is given regarding 5 shareholders, Mr. X, A, B, C, and D. Number of shares held by them are given, and date of ceasing to be a member. Mr. X transfer his shares on 1st April 2017. Mr. A on 31st May, Mr. B on 12th October, Mr. C on 20th December, and Mr. D on 14th Feb, Valentine Day. He transferred his shares. Now winding up commenced on 1st April 2018. Winding up commenced on 1st April 2018. So what is the exact period just before 12 months? What are the 12 months before 1/4/2018? Anybody tell me? Winding up commenced on 1st April 2018. What is the period before 12 months? No. 31st, not 31st March 18. What is the period within 12 months of winding up? Yes. Wrong. Not 1/4/2017. It is 2nd April 2017 till 1st April 2018 is the 12 month. Remember this. If year starts on 1st April, it will not end on 1st April. It will end one day before 31st March. So if the particular year to be end on 1st April 2018 commencement of winding up, so it will start on 2nd April 2017. Is this clear? We have to calculate 12 months up to the date of commencement of winding up. The commencement is not 31st March 2018, it is 1st April 2018. So which year ends on 1st April 2018 if it starts on 2nd April 2017? Is this clear? Is this clear? Yes. So Mr. X has transferred his shares. Mr. X has transferred his shares before 12 months of commencement of winding up. So he cannot be called upon to transfer his shares. He cannot be called upon to contribute. But Mr. A, Mr. B, Mr. C, and Mr. D are past members. Presently, Mr. B, A, B, C, D are not members. Remember this, student. Mr. A, Mr. B, Mr. C, and Mr. on the commencement of winding up. Mr. A, Mr. B, Mr. C, and Mr. D suppose sold shares to me, to you. Now we are present member. The person, the person who are transferring of share transferred by ABCD are present members, and they are not able to contribute because they have purchased the shares and company went into the liquidation. So if a creditors remains unpaid, there is a provision in Companies Act. If creditors remains unpaid and no funds are available with the liquidator and present members are not able to contribute, then only company can call past members, but not all the past members, only those past members which transfers their shares within 12 months just before the commencement of winding up, not beyond that. And also remember this, they will also liable for only those amount which Mr. A will liable for only that amount which is now outstanding, which is not unpaid, which is today unpaid, but he is not liable. But he is not liable for that amount after he ceases to become a member. Suppose Mr. A transferred the share on 31st May. So he is liable to the creditors of 31st May only. After leaving the company, after transferring the shares, he is not a shareholder of company. After that, any increase in creditor, Mr. A is not liable. So how to solve the problem? A statement showing B list contributories. No, I will tell you. Don't worry, Shubhangi. I will tell you. No. Particulars X, Mr. X is not B list contributory, only A, B, C, and D are contributory. The last column is paid to creditors and particulars oblique creditors outstanding. Statement showing B list contributories. Yes. Creditors outstanding. Let me please tell me, when A ceases to be a member, amount of creditors is, tell me. Not 12,000, 7,000. Actually, please remember this. Asset and liabilities are always as on. Asset and liabilities are always as on. So this 5,000 is included in this 7,000. This 7,000 is included in this 8,500. This 8,500 is included in 9,800. This is always as on. So when A ceases to be a member, what is the amount of, how many creditors are outstanding? Tell me. Yes. 7,000. After A ceases, how many creditors increased? After A ceases, 1,500, correct. Then after 1,500, how many incremental creditors are there? Incremental, because asset and liabilities are always as on. 7, then 1,300. And then after 1,300, after 1,300, after 1,300, 700. Correct. Now please tell me, number of shares are 1,000, 500, 300 and 200. When A ceases to be a member, A is liable, and on that date B, C, D are also members, because B, C and D leave after A. So for this 7,000, who are liable? A, B, C, D, all four are liable in the ratio of their shareholding. 10:5:3:2. Distribute this 7,000, 3,500, next 1,750, 1,050, check it, and 700. Is this correct? Okay. Now after this date, A ceases to be a member. Now for 1500, A is not liable. Now only BCD liable. 532. 750. 7,000 creditors are outstanding on the date on which rupees 7,000 creditors are outstanding on the date on which A ceases to be a member. So A is liable for 7,000 creditors, and on that date B, C, D were also members. A, B, C, D, all the four are past members. A, B, C, D, four are B list contributories. So for 7,000 creditors, they all four are liables in the ratio of their shareholding. Now after leaving A, there is an incremental creditors of 1500. For this increment, A is not there. Only BCD will there. 750. Then 450. Then 300. Next 1300. 3 by 2. For this 1300, AB not liable. Only CD. 780. 3 by 5 and 2 by 5. 520. And for this only D is liable. 700. Now what is the total amount? 3500. Second is 2500. A has to pay 3500, B has to pay 2500, C has to pay 2280, and 2220. X is not a B list contributory because he transfer his share before the 12 months because it does not transfer his share within 12 months just before the commencement of winding up. He transfer his share beyond this period. Number one, A, B, C, D, all four are past members, all are B list contributory. They will have to contribute for unpaid creditors. Why only when they will have to contribute? Because liquidator is no fund and present members are not able to contribute. That is why company law has a provision that they can call past members. A, B, C, D are past members. Presently they are not members, but they have to contribute. Now each person is responsible for creditors till the date of his seizing. Till the date of his seizing. The creditors, not all creditors, the creditors which are unpaid. The creditors which are paid is no relevance. They are already paid in liquidation. The creditors are unpaid today, but they exist on when A ceases to be a member. This was a creditor unpaid today, but at that time, the creditors existed from the date when A, B, C, D are members. So these shareholders are liable for that. But maximum amount cannot be called more than uncalled amount. So they say this is A. Now calculate B. B is number of shares into 4. This is 4,000. In any case, a shareholder cannot bring more than unpaid amount. For this is 2,000. For this, C only maximum amount is 1,200, and D's maximum amount is only 800. Number of shares into 4, and we can call A or B. Whichever is lower. So lower is 3,500 lower is 2000, lower is 1200, lower is 800. Total collection is 3500 plus 2000, 5500. Why 1500, Shubhangi? Why 1500 incremental part is not paid by A? Because such increase is after ceasing, because creditors increases from 7000 to 8500. That is, this 1500 increase of creditors is after when A ceases to be a member. When these creditors are increased, when these creditors comes into the business, A is not the member at that time. A is liable for only those creditors who are unpaid today and exist on the date on which he was a member. 7500, total collection is only 7500. Total collection is only 7500. So we will pay this 7000 and this 500. That's it. Now all are remain unpaid. There is no list C contributory. If liquidator says no fund and present members are not able to pay, then company can call past member bill is contributory. If bill is contributory cannot able to pay, then there is no list C contributory, then there is a loss to creditors. Now what is the loss to creditors? Calculate loss to creditors. Can anybody calculate? Loss to creditors. One way is to calculate is this. Total creditor is 10,500. No, not 3,000. Yes, loss to creditors how much? Out of this 7,000, 7,000 paid. Out of this 1,500, 500 paid. So one loss is 1,000. Then 1,300 is pure loss. Full loss and 700 is full loss. What is the total loss? Yes, 3,000. And there is an alternate calculation also, or calculate the total creditors. Calculate the total creditors. 10,500 is the total creditors. Calculate the total payment. 7,500 made total payment. So 2,500. Oh, sorry, 3,000. You can calculate loss to creditors in two manner. Calculate the total creditors. Total creditor is 10,500. Total creditors are 10,500 and total payment is 7,500. So 3,000 is loss to creditors. Otherwise, you can calculate like this. This 7,000 entirely paid. Total we have 7,500 only. Then remaining 7,500, 500 is paid to this 1,500 creditors. Hari Vignesh, we have not skipped 5,000 creditors. This asset and liabilities are as on. In this 7,000 figures, that 5,000 exist. In this 7,000 figure, that 5,000 exist. When X was shareholder, creditors were yes. So B-list contributories. Past members. A-list contributories. Present members. Present members not able to contribute. Funds not available with liquidator. Funds not available with liquidator. Then past members are called up. Then past members are called up. To contribute for unpaid creditors. To contribute for unpaid creditors. And maximum contribution not more than unpaid amount. Not more than unpaid amount. And past members are 12 month within before 12 month from commencement of winding up. The shareholders who transfer their shares just before the within 12 months of commencement of winding up are called upon to pay the creditors which were outstanding on the date when they are ceasing to be a member. And they are called only if there is no funds available with the liquidator and present members are not able to contribute. And maximum contribution is the unpaid amount. You cannot call more than that amount. Because rupees 10 share 6 paid up, so rupees 4 is outstanding per share. If you are a shareholder and you hold 1000 shares, and rupees 4 is not yet paid, so how much amount you will give? 1000 into 4. That is why we have multiplied it by number of shares. This is the amount. Okay. So in liquidation, I have provided you the notes of previous classes. Yes, I have already provided. Provided the notes of previous classes. I will also provide the notes of liquidation.